Today, this is a very important video where we are going to cover why one should go for mutual funds and not directly for stocks, where mutual funds are also investing in stocks itself.
Yes.
So why go through a manager and not do it directly ourselves?
Yes. You see, equity is a very specialized subject, and equity selection, equity analysis, which stock to buy, how much to buy, and most importantly, when to buy. It is a very specialized subject which everybody cannot do. Even the people who are familiar with the stock market cannot do. This requires a lot of training and formal education which the fund managers have. There are people who are doing stock picking, stock buying, but the point is when you buy a stock, you are buying only few companies and you don't know which one will do well, which one will not do well. But when we talk about mutual funds, and we have already discussed that we are going to select from 4 funds of large, mid, small. So now the fund manager who has a whole team, fund manager is not one person. He has at least 10 people under him who are doing research. So now he knows which company to buy, when to buy and when to sell. The most important decision is to sell. So when you buy a mutual fund, you give your headache for 1% commission or expense charges to a whole team. There is a whole team of HDFC, Axis Mutual Fund and Kotak Mutual Fund and ICICI Mutual Fund working for your 5,000 rupees.
Round the hour, who are much more qualified, much more educated.
And now the second part, why not stocks and that? Firstly, you are free from your worries. Our basic job is to run ships. Like we said, invest in your profession.
Right.
This is another profession. You may do it for your hobby later on, but that will not be generating wealth. There are a lot of finer reasons which we will explain later on why direct stock purchase is bad. What are the reasons? There have been books written, plenty of books have been written which people can read. But it is sufficient to say that we are here to diversify our risk. Firstly, you can start with minimum 5,000. After that, you can invest as less as 500 rupees after the initial investment. No stock. Very few stocks you can buy for 500 rupees. Maybe you will buy one share. Here, whatever money you have, you can invest. So at the outset, your risk is distributed in 40-50 stocks. Then you have distributed by way of SIP every month or every week. So money is invested at every level. And of course, the expertise which you have. So it is completely keeping you free, your mind free of any anxieties. You are not concerned in the selling part. You can continue this up to your retirement.
So guys, all I can say is each video that you are making, we're learning something new and we'll keep doing that. And that's it for this video right now. Thank you very much. Jai Hind, Jai Bharat, Jai Mata Di.